Hello everyone, welcome back to our lecture. This is our second lecture. Yesterday we have completed the lecture number one. I hope you have understood those concepts very well. So let us just revise quickly what we have done or we have learned in the previous lecture. See, in the previous lecture, lecture number one, we have completed the basics and the text structure part. We have started the text structure part, but we have completed the taxation basics. Okay, just revise it. What are the types of taxes? There are two types of taxes: direct tax and the indirect tax. Taxes. Direct tax are those taxes where the burden to pay is on the same person, and whereas the indirect tax is the taxes where the burden to pay transfer to any other person. I hope this is clear. Then second is the Constitution of India under article number 265 lays down that no tax shall be levied or collected except by the authority of law. I hope that you have understood the meaning of those words: levied or collected. Then article number 246 of the constitution in the seventh schedule consists of three lists, which is union list, state list, and the concurrent list. The matters stated in the union list gives power to the central government of India to take taxes on those income, and whereas those matters which are enlisted in the state list gives the power to the state government, the respective state government, to take taxes. In which we have discussed that union list number one, the union list under entry number 82, the power to take tax on income is given other than agriculture income, because agriculture income is enlisted under state list. Okay, then the concurrent list, I have given the example of GST, where the both the governments, union and the state government, both have the right to take tax. Okay, then we have also discussed about the components of the income tax: the Income Tax Act 1961, the income tax rules, finance act, circulars, and judgments. Now what we are left here is why it is 1961 and 1962, and why it is applicable from 1962 itself. So see, yesterday we have talked about the assessment year and the previous year definition as well. So let us come on that. Okay, what is the previous year? In which you earn income, and on that income you will give tax on the in the assessment year. It is a period of 12 months. So can the previous year can be less than of a 12 months? Yes, it can be less than of 12 months, where from where you are starting your business till the end of the 31st of March. It will be a previous year, but the assessment year will definitely and 100% will be of 12 months, starting from the 1st of April to the 31st of March, in which you will pay tax on the income earned in the previous year. That is why Income Tax Act came in 1961. Income Tax Act came in 1961. So in the year 1961, from 1st April 1961 to 31st March 1962, whatever you have earned, you will give tax in the year 1962. That is why Income Tax Act is applicable from 1962, because I have also said you that whole income tax written in the language of the assessment year. So everything which is written in the act is based on the assessment year. That is why the Income Tax Act either came in 1961, but that will only have effect from 1st April 1962. And when you have to give taxes, then only you will need the rules. How will you pay taxes and any other forms and each and everything? Those rules will be needed when you pay taxes. That is why the income tax rules will was applicable from 1962 itself. I hope it is clear. Then the Finance Act, we have discussed the circulars and notifications. We have discussed the Finance Act. We have discussed in full detail. Okay, what is the structure of what is the structure? How a bill becomes act, and each and everything with the practical example. Okay, then the circulars and the notification and the judgment. And I said that this time the finance number 2 bill to 2024 came on 23rd of July 2024. This is a website where from where you can access the budget. Okay, budget speeches, memorandum to finance bill, each and everything. Now the process of making act is: first the government will produce a bill, a document, then it will be passed in the Lok Sabha, then in the Rajya Sabha, then will get the assent of the president, then it finally becomes what? Act, and it will be published in the official gazette of India. Then what is the person's definition? See, person is income tax act given the definition of the person under section 2 clause 31, where it says that person is an individual, HUF, company, firm, LLP, association of person, body of individuals, AJP, and local authority. I hope it is very much clear. Each and every point is very much clear. I have given the examples of each and every point as well. Okay, then the assessment year and the previous year I have also completed that. Then in the chapter I have talked about the charging section of the income tax act is given under section number 4, which says that income tax shall be levied on total income, not the gross total income, is on total income of every person. Now you know the every person word. Okay, at a rate specified in. What will be the rate? I said rate will be given under 2 points. Okay, first at the finance act gives the general tax rates like the slab rates or any other rates. Okay, and if any other point that need to be taxed, okay, that special tax rate will be given under the income tax act in that particular section itself. I hope it is very much clear. Okay, now what is the total income? I said total income is a gross total income minus deduction is equal to total income. Now what is a gross total income? Gross total income comes from the five heads. Okay, the total of five heads will be the gross total income. What are those five heads? We'll discuss in the later part. Okay, now we have also discussed about the tax rates for the assessment year 25-26. For your attempt, the previous year is 24-25 and the assessment year is 25-26. These are the general tax rate which we are going to discuss. Okay, for individual HAF, AOP, BOI, AJP, whether he is resident or non-resident does not matter. Every non-resident will be covered here itself, irrespective of his age. Irrespective of his age, every non-resident will be covered here itself. Okay, so up to 2,50,000 there will be zero tax. 2,50,000 to 5 lakh 5%, 5 lakh to 10 lakh 20%, and greater than 10 lakh will be 30%. This is the general tax rate. Okay, this is the normal tax regime. Now for the senior citizen who is resident, not a non-resident, who is resident and who is of age 60 or above. 60 is also included here. Okay, so every person who is of every resident individual who is of age 60 or more but less than 80. Okay, if he is less than 80, then the basic exemption limit will increase to 3 lakh from 2 lakh 50,000. Okay, the tax will be 0. 3 lakh to 5 lakh 5% tax, 5 lakh to 10 lakh 20% tax, and above 10 lakh there will be 30% of tax. Then for the super senior citizen, like if an resident individual, again the resident individual, okay, not the non-resident, the resident individual of age 80 or more in any previous year, okay, if he is 80 or more, then the basic exemption limit will increase to 5 lakh rupees. Okay, for 5 lakh rupees there will be no tax. 5 lakh to 10 lakh there will be 20% of tax, and greater than 10 lakh there will be 30% of tax. And there was a CBT clarification as well, that on the 1st of April of any assessment year, 1st April of any assessment year, if a person is attaining the age of 60 or 80, 60 or 80, then it will be considered that he has achieved that age within the previous year itself, that is on the 31st March, so that he can take the benefit of the higher exemption limit. I hope it is clear. Then we have solved some questions as well on basis of this, that Mr. Arjun has a total income of rupees 16 lakh, comprising of income from the house property and the income from fixed deposits. Compute the tax liability for the assessment year 25-26, assuming his age 52, 64, and 83. We have covered all the three slabs. So we have solved this each and every point here itself. Okay, this one is clear. Then we move ahead and comes to the point of the surcharge. So I have said that surcharge is the tax on tax. The government wants to bring the parity between the persons who are earning high and the who are earning less. So there should be a economic balance between those two people. So the government is taking surcharge from those who are earning high, okay, and giving benefits to those who are earning less. That is why the concept of what rebate and the concept of basic exemption limit came, because we are earning more from surcharge from the individuals who are earning high. Okay, so surcharge is a tax on tax. What is the surcharge slab that I have shown here as well for the easy understanding, that total income up to 50 lakh. If you are earning 50 lakh, that is total income, not the gross total income. Listen to the words very carefully. It is the total income, not the gross total income. Okay, so the total income is up to 50 lakhs, then there will be no surcharge. Above 50 lakhs, okay, there is a total income of 50 lakhs, then where it come, then there will be no surcharge. Exit 50 lakh, no surcharge. 50 lakhs above, up to 1 CR, there will be surcharge of 10%. 1 crore above, up to 2 CR, there will be surcharge of 15%. Then 2 CR above, up to 55 CR is 25%, and above 5 CR it will be 37%. I hope it is clear. Then there was a problem. There was a problem that there are various FIIs invested in our country for for our India's growth. So the government does not want those FIIs to let go and take their investment back their home. So they want those FIIs to get invested, to remain invested in India's growth itself. So for that they give some certain benefits on the dividend, on the 111A, on the 112A or 112. 111A, 112A is the share, the sale of share, the capital gain from the sale of shares and securities, and the dividend, and 112 was the capital gain on the land or building. Okay, this is clear. For those, what government said the maximum surcharge rate will only be what, 15%. The maximum surcharge rate was will only be of 15%. Okay, so we have taken certain examples, that suppose if a individual is earning 3 crore rupees of total income. Okay, the total income is 3 crore. Out of those 3 crores, the dividend 111A, 112A or 112, the special income part is 1.2 CR. So the special income will only be get taxed at the rate of 15%, not more than that. Okay, not more than that. So it will be 1.2 CR. Okay, it will be 1.2 CR multiplied by 15%. But the remaining other income, what will be the tax rate for those remaining income? So I have said that, just check, it is 1.8 CR. Just go on the above slab and see 1.8 CR comes under which slab? It comes under 1 to 2 CR slab. Okay, what is the tax rate? It is 15%. Okay, so it will 1.8 CR will also be get at the rate, will also get tax at the rate of 15% only. Now if the person is earning 5 CR of income, the special income is 2 CR. Special income will definitely be taxed at maximum at the rate of 15%. I am saying maximum. Okay, now maximum at the rate of 15%. But other income, suppose the other income is 3 CR, again comes to the slab. 2 CR to 5 CR comes to, under 3 CR coming under the 2 CR to 5 CR slab. What is the tax rate? Tax rate is 25%. Oh, sorry, the surcharge rate is 25%. So the surcharge will be taxed at the rate of 25%. Now what is the, if the earning, if the person is earning the total income of 8 CR, then the special income will be 2 CR. The is special income is 2 CR, so 2 CR will only be taxed at the rate of 15%, and the rest of other income is 6 CR. So it is above 5 CR, so it will be taxed at the rate of 37%. I hope this is very much clear to you. Okay, for after that we have said that health and education cess will always be taxed. Okay, the government will definitely going to charge you the health and education cess if you are giving tax any amount. If you are giving the tax of 20 rupees, or if you are giving the tax of 100, 200, 300 rupees, the government will definitely going to charge you the health and education cess of 4% over and above the tax and the surcharge amount. Okay, this is clear. Then we also have solved the example. I hope it is clear. Till now it is clear. Then I also said that there is a tip that surcharge on the social income can never exceed 15%. Then the we have discussed about the rebate part. Rebate, what is the concept of rebate? That the government is charging high from the individuals who are earning more. So the government should also wants to give certain relaxation to the persons who are earning less. Okay, this is how the government is going to bring the parity in the economy. So there was a section in the income tax act, there is a section in the income tax act that that says about section 87A, that is rebate of from tax to certain individuals, not to every individual, to only certain individuals. Who are those certain individuals? First condition, it should be he should be resident individual, not the non-resident. We are not going to give the rebate to the non-resident individual. We are only going to give give the rebate to the resident individual having total income, not again the gross total income, but only total income. Okay, total income up 5 lakh rupees, up to 5. If you are earning more than 5 lakh rupees, then this rebate is not applicable to you. Your income should be 5 lakh or less than 5 lakh only. Okay, so up to 5 lakh if you are earning, and if you are a resident individual, then your tax, then you will get rebate of 100% of the tax payable, or 12,500, whichever is lower. If we calculate that, so the 5 lakh, the tax on the 5 lakh rupees will only comes to 12,500 only. So 100% of the tax or 12,500, whichever is lower, will definitely going to give you the 12,500 amount only. Okay, now the important, the cautious point are, this rebate shall be reduced from before adding health and education cess. You do not need to add health and education cess. If you are earning less than 5 cr, then give the rebate, directly give the rebate. You do not need to calculate the tax and add HEC. After that you have to give rebate. No, you have to, if you are earning less than 5 lakh rupees, directly give rebate to that person. Okay, then I have also said that rebate under section 87A available against all type of income except LTCG under section 112A. If we will study what the LTCG under section 112A in the later part of the classes, but rebate under section 187A is not available to the income which pertains to the long-term capital gain under section 112A. I hope it is very much clear. Now, starting today, we are going to study the concept of marginal relief. Under 16 minutes, we have completed each and every point that we have studied in the last lecture. I hope you have revised it very well, and each and every point is just revised very well, and you know, or you can recall each and every point. Okay, now starting with the marginal relief concept. What is this marginal relief concept is? See, to understand that concept, let me give you some example. Okay, come here again, start writing each and everything. Okay, you cannot leave this on to me. Marginal relief, just a there is some problem, just a second. Yeah, come to marginal relief. What is this topic talks about? See, to understand this, I have to give you some examples. Okay, suppose you have to calculate this. Suppose Mr. XYZ earns total income of rupees 50 lakhs. Okay, calculate the tax liability for the assessment year 2025-2026. Okay, this is your question. Mr. X earns the total income of rupees 50 lakhs. Calculate the tax liability for the assessment year 25-26. Now understand one thing. If the question says compute the tax liability, if they are saying compute the tax liability, you have to compute the full tax liability including the health and education cess. I hope it is clear. Now just come to let me give you another point. Age 54 years. Okay, the age is 54 years, so you have to apply what? You have to apply the normal slab of 2,50,000. This is the basic exemption limit. Okay, this is clear. Now calculate this. What I have said, you have to write the computation of tax liability of Mr. XYZ for the assessment year 2025-2026. I hope it is clear. Now it is clear. Okay. Hmm, sorry. Okay. Now compute particulars. You have to write each and everything. You can you have to write these particulars as well, rupees as well. This is the neat presentation. If you present your answers very neatly, then the examiner will give you marks very high, so as compared to other students who are not who are not presenting in this format. Okay, it is the impression that you are giving to the examiner. Okay, then he'll give you the marks. So starting with, the income is 50 lakh rupees, is maybe age 54. Okay, see, up to rupees 2 lakh 50,000, tax is nil. Okay, 2 lakh 50,000 to rupees 5 lakh at the rate of 5%. Okay, 2 lakh 50, it is 12,500. Then 5 lakh to rupees 10 lakhs at the rate of 20%. So it is 5 lakh multiplied by 20%, which comes to 1 lakh rupees. Okay, then it is 10 lakhs rupees 50 lakhs. Okay, the income is 50 lakhs, it comes to 30%. To 40 lakhs multiplied by 30% comes to 12 lakh rupees. This is the total tax. The total tax comes to 12 plus 1, 13, 13, 13 lakh 12,500. Okay, 13 lakh 12,500. This is the tax. But on this tax, whether the surcharge will be applicable, just see whether the surcharge will be applicable on the 50 lakh rupees. No. 50 lakh rupees, there is no concept of surcharge. Whether rebate will be applicable, no chance. Rebate is applicable up to 5 lakh rupees only. So the surcharge is also not applicable, the rebate is also not applicable. So directly comes to what health and education says. Directly add what health and education says at the rate of what 4%. Okay, so 13 lakh 12,500 multiplied by 4% is 52,500. I hope you are solving along with me. Okay, then including it, it will be total tax liability will be 13 lakh 65,000. Okay, this is the tax liability. This is your answer. Okay, this is your answer. Is this point clear? Now, again, I am giving you some example. The example number 2. Give it example number 1. Now, write example number 2. Each and everything remains same. The question remains is going to be same except one thing. Except one thing. Oh, sorry. Okay. Change the total income. Total income increases to 51 lakh rupees. Okay. We have increased just what total income up to 51 lakh rupees. From 50 lakh rupees, we have increased from 51 lakh rupees. The answer remains also same, except one thing. You have to write this. You cannot leave this on me. You have to write this. Okay. Paste. This is the liberty that I can get, not you. You have your exams. Okay, each and everything remains same. The computation of the tax liability of Mr. XYZ for the assessment year 25-26, even the age remains same. But now see what will happen. The only change will be here only. Now it will be 51 lakhs. Okay, now the 51 lakh rupees, and let me remove this as well. Okay, health and education says tax liability. Uh, okay. Now, what will be the 51 lakh rupees tax on 51 lakh rupees? Suppose 51 lakh minus 10 lakh multiply by 30%. It will be 12 lakh 30,000. Okay. 12 lakh 30, 12 lakh 30,000. Then the total tax will be 12 lakh 30,000 plus 1 lakh plus 12,500. It will be 13 lakh 42,500. Okay, now see, his income, Mr. XYZ's income increases to 51 lakh rupees from 50 lakh rupees. Now, see, income exceeds 50 lakh rupees. Now the surcharge come into play. Now you have to also calculate the surcharge. See, 51 lakh comes under this slab from 50 lakh to 1 CR. So there will be 10% of surcharge. Okay, we have calculated the tax. What will be the tax? Tax will be 13 lakh 42,500. Now what comes into play? The surcharge comes into play. Okay, I am writing it from the another pen. At surcharge at the rate of 10%. Shall I compute surcharge on 51 lakh rupees? 10%, 51 lakh multiplied by 10%. Should I do so? No. What I have said that surcharge is the tax on tax. So tax is 13 42,500. So I have to calculate 10% on 13 lakh 42,500. Okay. So I have to write this 13 lakh 42,500 multiplied by 10%. It comes to 134250. Okay. When I do so, then it will comes to what? Plus 10%. It will come to 1476750. Okay, 1476750. Now add health, health and education cess at the rate of 4%. 4% will be calculated on 1476750. Okay, 1476750 multiplied by 4% comes to 59070. Then the amount comes to what? 1476750. 153 15 lakh 35,820. This is the amount. Okay, understood? This will be the tax on 51 lakh rupees. Okay, this is the tax on 1 lakh 15 sorry 1 lakh 50 15 1 lakhs. Okay, now see, now just understand one concept, one thing. Just understand one thing. Tax on rupees 50 lakhs is how much? 13 lakh 65,000. Now tax on rupees 51 lakh rupees. Okay, it will comes to what? 15 lakh 15 lakh 35,820. Now see what is the difference between these two figures. What is the difference between these two figures? 15 lakh 35,820 minus 13 lakh 65,000. The increase in the tax. These are the tax. Okay, and these are the total income. ठीक. Okay, now the increase in tax is equal to rupees 1,70,820 is the increase in tax. When I do 15,55,820 minus 13,65,000, the increase in tax to 178,20. Now here the assessee, the person who are giving tax, is very much tensed. What is his issue? What is his issue? He said, see, the government, see, I was earning 50 lakh rupees, you are charging me 13 lakh 65,000 rupees. I as a tax, I have no issues. But when I earn 51 lakh rupees, you are charging me 15 lakh 35,820. Just see the complications. I am earning excess only 1 lakh rupees. I am earning excess. The increase in my total income is only 1 lakh rupees. But due to this, my tax increases to 178.20. I am earning 1 lakh extra. You are taking tax 1 lakh 70,820 extra from me. This is very unfair because I am earning only 1 lakh rupees extra. But because of that 1 lakh rupees, I am covered under what? Surcharge at the rate of 10%. And for that, I have to pay extra tax of rupees 70,820. Extra tax of rupees 70,820. Because why it is extra? Because I am earning 1 lakh rupees extra and I have to pay tax on, I have to pay tax 178.20. Okay, so there is a mismatch. I am just earning 1 lakh rupees extra. You are taking what? 178.20. So the government is saying what? So the government is saying what? The government is saying, okay, we can understand your pain. Now, what we can do? We can come up with the concept of marginal relief. What we can do? We can come up with the concept of marginal relief, and we will give you some relief on the tax. Okay. So the assessee has, the person asks, what will be the marginal relief? So the government said, see, what was your tax? Your tax on, suppose you are earning only 50 lakh rupees. So the tax on rupees 50 lakh rupees comes to what? Rupees 13 lakh 65,000. Okay, that we have calculated. So the government is saying what? See, the government is saying just think one thing. That you have a problem that we are earning only 1 lakh rupees and you are charging me the tax of 178.20. You are of the problem that the increase in tax is higher than the increase in income. But how much amount? The increase in tax is how much amount higher than the increase in total income? So the person says it is 70,020 only. So the government is saying that okay. Okay, so we'll give you the relief of 70,820. We'll give you the relief of 70,820. So, what will be the extra charge? It will be only 1 lakh rupees. So, the government is intentionally saying what? Whatever you have earned extra, whatever you have earned extra, that 50 lakh to 51 lakh, just give it to us directly. So, as a extra tax, you can say extra tax rupees 1 lakh rupees, then your tax will come to rupees. See, tax tax liability will be what? Rupees 14 lakh 65,000 rupees. No. What was your problem? Your problem was, I was earning 1 lakh rupees extra, but the government is charging 178.20. Your problem was that 78.20 only, because you are earning 1 lakh rupees maximum. I can give you 1 lakh rupees, but extra of earning 1 lakh rupees I am giving extra 70,820. This is the problem. If I am earning 1 lakh rupees extra, maximum to maximum, I can give you 1 lakh rupees. If I can say, okay, no problem, I have given the 1 lakh rupees extra, but this is the burden on me, 7820. From where I can give you this amount? So the government is intentionally giving that relief only. The intentionally giving that relief only. Now you can calculate this relief. Okay, you can say that marginal relief is what? 15 lakh 35,820. That is the tax on 51 lakh rupees. But we are taking tax only 14 lakh 65,000 only. We are taking tax 14 lakh 65,000 only. When you calculate this, see, 15 lakh 35,820 minus 14 lakh 65,000, it will come to 70,820 only. That was the problem of the assessee, and the government said, okay, okay, give this relief. There are now understand, there are two methods to solve this problem. Okay, there are two methods to solve this question when it comes to the exam paper. See, there are two methods. What you can do? First method is say this method. Just calculate tax on what? Calculate tax on 50 lakh rupees only. Calculate tax on 50 lakh rupees only, and then add the extra income that you have earned, extra income of rupees 1 lakh rupees, and you come to 14 lakh 65,000. Another way, what is the another way? The another way is that the marginal relief, that calculate tax on 51 lakh rupees, calculate tax on 51 lakh rupees, and reduce what? And reduce the excess of this, and reduce the excess of marginal relief, that is 17,820. You will come to 14 lakh 65,000. Finally you have to pay only 14 lakh 65,000. Now you can calculate this way, or you can do this way: 1582 1535 820 minus 70 820, that will reach you to 14 lakh 65,000. I hope it is clear. I hope it is clear. No problem at all. But now, one point: while calculating the surcharge, while calculating the marginal relief, ignore cess. For the calculation of that, ignore cess. You have to calculate tax without adding cess. You can take this figure, or and you can take this figure. Okay, by taking these figures as well, you will reach to the same answer. Okay, so by to maintain the uniformity, just do not add the health and education cess while calculating the marginal relief. Okay, is this point clear? See, this is what it is written here as well in the basic structure. See, marginal relief says that if income exceeds 50 lakh, 1 CR, 2 CR or 5 CR, for whom individual HUF, AOP, BOI, AJP, company written, no, firms written here, no, no company, no firm. So the marginal relief is not applicable as of now till here as of now it is not written for the companies or AOP because their slab rates are changed. So, or 1 lakh in 1 crore in the case of company, firms, local authority, and the cooperative society, or 10 lakh in case of company or the cooperative society. These are the limit based on what? Based on the slab rates of the companies, local authority, firms, cooperative society, based on that. But as of now, as we have studied only what individual HUF, AOP, BOI, AJP tax rate, so we are discussing only what this. We are discussing only this part. Okay, the same will be applicable to the companies, firm, LLP, local authority, cooperative society. Same will be applicable to them as well. Okay, now a surcharge is applied to the entire amount of tax, resulting in the tax increase greater than the increase in income. That is what it is happening. That is what it is happening in our case as well. Our income was increasing from 1 lakh, but our tax was increasing to 178.20. That was the real problem to us. Okay, that the increase in tax is greater than the increase in income. To address this issue, assessee shall get the relief if the increase in tax exceed the increase in income. I hope it is clear. Now, steps for calculation of marginal relief. This is the same step. See, calculate tax on original total income. That is the 51 lakh rupees. Okay, that is what? 51 lakh rupees. They are saying calculate 51 lakh rupees. Okay, I said without tax. Okay, so without says what is the amount on 51 lakh rupees without adding says this is the amount. Let me show you. This is the amount of tax 1476,750. Okay, 1476 750. Okay, now calculate tax on step number two. What? Calculate tax on 50 lakh, 1 crore, 2 crore without cess. Again, we have calculated this. This is the amount without cess is 13 lakh 12,500 only. Okay, now come to the point. 13 lakh 50 lakh rupees, it comes to 13 lakh 12,500. Now, tax to be paid. Step 2, that is this 13 lakh 12,500 plus extra income. Extra income is what? 1 lakh rupees. So, 13 lakh 12,500 plus what? 1 lakh rupees. You will get what? 14 lakh 12,500. And the marginal relief will be what? Marginal relief will be step 1 minus step 3. Step 1 minus step 3 is what? Step 1 is 14 lakh 76,750 minus 14 lakh 12,500 will comes to what? 1476,750 minus 1412,500. It comes to 64,250. Why it is different, sir? It is 64,250, and you said it is the difference. It is the amount of 70. You calculated the amount of 7820, but here comes with the formula 64,250 because I have said you the one thing, because we have calculated both the figures. We have taken both the figures, including what? Including cess. We have taken these figures. Okay, that is why there is a difference. But finally, what you have to pay? You have to pay only that much amount. Okay, you can check that. It is said that without cess. Okay, take without cess. After that, on this income, we will add cess. Okay, we will add cess. So on 14 lakh 12,500, 14 lakh 12,500 plus 4%, you'll get the tax of 14 lakh 69,000 rupees. Okay, just we have taken the cess. Here it ignores the cess part. I hope it is very much clear to you all. It is clear. This is the example. Now, the example. Total income of Mr. Shyam is 85 lakh rupees. He's a NR. The word is what? NR is what? NR is the non-resident which comes to the slab of 2,50,000 only, not 3 lakh, not 5 lakh. His age is whether 85 lakh, sorry, 85 years. He can come to the slab of 5 lakh rupees. But if he is NR, then he'll come to the slab of he's come to the slab with a basic consumption limit of 250 only. Okay, he's earning 1 crore 1 lakh rupees as his income. Assassi not opted for 115 BSE. What is 115 BSE? We'll see in today's lecture itself. Okay, calculate the tax liability. It is going to be same, but there will be one twist. What will be the twist? So if he's earning 1 crore 1 lakh rupees, so see, it will come to the second slab of surcharge. It will come to the second slab of surcharge. See, up to 50 lakh rupees nil. But 50 lakh to 1 CR, it is already having 10%, 10% of the surcharge. But from increasing 1 lakh rupees above 1 CR, from increasing 1 lakh rupees above 1 CR, because its income goes to 1 crore 1 lakh. If increasing 1%, if increasing this what? 1 lakh rupees, he comes to the surcharge rate of 15%. Because of this, there's an increase of the surcharge rate from the 10% to the 15%. There will arise the concept of marginal relief as well. Whether you are earning, whether your applicable surcharge on the old income was not applicable, or your surcharge increases, in both the condition, the marginal relief will be applicable. I hope it is clear. See, if the surcharge is applicable or their rate changes because of your changing in income, the concept of marginal relief is applicable. Okay, now you can solve this question very well. It is very easy question. Just you have to apply the 10% surcharge as well. Should I solve this question? Let us solve this question. Let us solve this question as well. Just a second. To give you the clarity that without says how the things will work. Okay. Example. Rupees 1 crore 1 lakh rupees. He is a non-resident. What his name is? His name is Mr. Shyam. Okay, 85 years. Okay. Solution. Computation of X liability of Mr. Shyam. 80, which is 85 years. Okay. For the assessment year or the AY 2025-2026. Okay. Now compute, solve it by your own, and last check your answer. Okay, at least check your answers. Particulars rupees. Now see, tax on rupees 2,50,000, because he's a NR. He's a NR. 2,50,000 is nil. 2,50,000 to rupees 5 lakh, it comes to at the rate of 5%, which is 12,500. Then 5 lakh to rupees 10 lakh at the rate of 20%, which comes to 1 lakh. Then 10 lakh to rupees. Now, what should I do? I should do whether 1 lakh, sorry, 90 lakh rupees only or 91 lakh rupees. How will you calculate? So, see, what is the first step? First step is to calculate tax on the original total income. So, it will come to what? It will come to 91 lakh rupees extra 91 lakh rupees. So, we will calculate to 1 crore 1 lakh at the rate of 30%. Okay. So, it will come to 91 lakh multiply by 30%, it will come to 273,000 or 4 times 0. Okay, this is our tax plus 1,12,500. It comes to 28, 42, 500. It says without cess, but if we are earning 1 crore 1 lakh rupees, we have to give tax at the rate of, we have to give surcharge at the rate of what? 15%. So add surcharge at 15% on 2842500. Okay, multiply by 15%, it comes to what? 426,375. Okay, if I do total of this, it will come to 3268875. 3286875. 3268875. I hope it is clear. It is clear. Now comes to the second part. Now you have to calculate what is the step 2. Step 2 is to calculate tax on the 50 lakh 1 CR or 2 CR. Okay. Now what will change? See, as a working note, let me do it. Let me do here only. Tax on. Okay. Step 1. Now step 2. Tax on. Tax on 1 CR. Okay, tax on 1 CR, because on our income is 1 crore 1 lakh rupees. So it, the marginal relief will is coming from 1 crore, the over and above of 1 crore. Okay, so over and above of 1 crore, there is an increase in 1 lakh rupees only. Because of that, there will arise a concept of marginal relief. So the tax on 1 CR, what will be the tax on 1 CR? It will remain the same. Let me do it like this, like 10 lakh minus, it will come to 1 CR. It will be 90 lakhs. 90 lakhs multiplied by 30% plus 1 lakh 12,500. It will come to 28 lakh 12,500. Okay. X on 1 CR is equal to 28 lakh 12,500. Here what you have to do, here as well you have to add surcharge, but here the surcharge rate will only be 10%, because up to 1 CR you will come to the slab of 10%. So what will be the 10%? 281250. So add 10% to 8, it will come to 3093,750. This is the second step. See, 3093,750. I hope it is clear. Now, what is the third step? Third step is to get tax to be paid. Now, step 2, there is the extra income what you have earned. What is the extra income? That from 1 CR you are earning 1 CR 1 lakh rupees. 1 crore 1 lakh rupees. So extra income that you are earning is only 1 lakh rupees. Okay, the extra income that you are earning is only 1 lakh rupees. Now comes to the point. Okay, let's come to the point. What is the step number 3? Tax to be paid. It says step 2 minus what? Step 2 plus extra income. So what is the step 2? Step 2 is 3093,750. Okay, plus extra income of 1 lakh rupees. It comes to 4093,750. Sorry, sorry. 3193750. Okay, this is going to be tax to be paid. See, 3193750. Okay, 3193750. Now what will be the marginal relief? Marginal relief is saying that what you have, you will calculate the tax on the total, your original total income, that is 1 crore 1 lakh rupees, minus what? The marginal, minus what? Marginal relief. Or we have to calculate the marginal relief. So what it says, that we calculate the first step less the tax to be paid. Okay, the tax to be paid, it will come to the amount of the marginal relief. Okay, marginal relief amount that comes. Okay, if you do not need to do this, then I'll show you the another way as well, that is a short way. Now step 4 is that what? Marginal relief. What is the marginal relief? Marginal relief, it is saying that, see, it is saying that what? Step 1 minus step 3 comes here. Step 1 is what? Step 1 was 32 68 875. 30, uh, 36 68 875 minus 3193750, then it will come to 3668875 minus 3193750. It comes to 475 125. Sorry if I have done anything wrong. 62, sorry, 32. Okay, it is 32. Sorry. I have written mistakenly. It is 3268. 68 875. Okay, 3268 875. 3268 875 minus 3193750. 75 125. It is the concept of marginal relief. See, 75 125. So you will get the relief of 75 125 from the income, from the tax of this. So you can minus, see, you can see the another way. This minus this, do this. 32 is 68875. 3268875 minus 75125. You will come to 31 lakh 93,750. This is what you get. Okay, so what you can do, you can directly calculate the tax on this total income. Okay, then what you have to reduce, what the marginal relief. Okay, this is the whole point that you need to know. Okay, this is the only mathematics that you can do. Either this minus this comes to this minus this comes to this. Okay, this is the only point of calculation. I hope it is very much clear. I hope it is clear. Okay, good. Now coming to the next point, the round off under section 288 and 288B. Before that, just let me give you the another point, that what you can do in the shortest way. See, calculate the tax on rupees 1 CR. We have calculated the tax on 1 CR. The tax on 1 CR is 3093750. Now the shortcut, I am telling you the shortcut, but you can apply as well in your examination. Okay, you directly add the extra income. What is the extra income? 1 lakh rupees. Okay, so 31 lakh 93,750 is what the tax to be paid. Okay, this is the amount of tax to be paid. See, this is the amount of tax to be paid. You can directly add 1 lakh rupees in this. Okay, this is the point. Directly we can do step number 3. We do not need to calculate the step number 1 in this case. Okay, directly calculate what? Directly calculate the step number 2, that is the tax on 1 CR. Add what? Add the extra 1 lakh rupees of income. You will come to the tax to be paid. This is your tax to be paid. That's it. Nothing else. I hope it is clear. Okay. Now, what you can do now, if you have to calculate the marginal relief as well, if they specifically say that calculate the marginal relief, so what you can do, you can again calculate what the tax on total tax on 1.1 cr. Okay, it will come to what? 3268,875. Now you have to pay 3268,875, but what you are actually paying, is 3193,750. So reduce 3193,750 from this. Okay, so 3268,875 minus 3193,750 comes to 75125. This is what your marginal relief is. Okay, I hope it is clear. No problem. So you can do by any method you like. Okay, you can follow these steps as well, or you can calculate like this as well. This is your choice. The completely your choice. Both things work in your examination part. Okay, now coming to the section number 288A and 288B, what it says, you have to round off the total income and the total tax to the nearest rupees 10. To the nearest rupees 10, the total income for section 288 is for the total income, and section 288B is for the tax part. Okay, so if you want to round off the total income, then you will quote the section 288A, but you need to round off the tax, then you need to quote the section number 288B. So the total income or the tax rounded off to the nearest of rupees 10. Now let me give you the example. Suppose it is 45, the tax is 45 10 10 2 5 2 4 5. What will be the round off of this? The round off of this if it is 5 or above 5, if the last digit is 5 or above 5, then it will be round off to the upper side. It will be round off to the upper side, then the text will be 250. Okay, this will be the text. But it is less than 5. Okay, so suppose the amount is 2 4 2 4, sorry, let me take this 54 to 52. Okay, then the tax amount will be, if we round off to the nearest rupees 10, then you will pay only 54 to 50. If you have to do what, nearest round off to rupees 10. If it is 5 or greater than 5, then it will be upper side round off, and if the last digit is less than 5, then it will be the lower side round off. Okay, now coming to the next point. Now these points are very easy. Let me tell you, in these points are going to be very easy. See, the tax rate in case of firm, LLP and local authority, both are covered here. Firm, LLP and local authority, the flat tax rate is 30%. Whether you are earning 1 rupee, whether you are earning 20 rupee, 30 rupees or 100 rupees, doesn't matter, or 2000 crore rupees, does not matter. If you are earning this, the flat rate is 30%. Okay, directly 30%. There is no slab rate like what, like the individuals HUF, AOP, BY, there is no slab rate, directly 30%. And surcharge will be 12%. The flat surcharge will be 12%, but to whom? If the total income exceeds 1 CR. So up to 1 CR there will be surcharge? No, there will be no surcharge. The surcharge will only be at the rate of 12% if the total income exceeds 1 CR, and the health and education says is the evergreen. I hope this point is also clear. Now coming on to the next point. Tax rate in case of cooperative societies. The tax rate will be in case of cooperative societies. So for the cooperative societies up to 10,000 there will be no tax. 10,000 up, but up to 20,000, 20% of tax, and above 20,000 there will be 30% of tax. So up to 10,000, 10% of tax, 10,000 to 20,000, 20% of tax, and above 20,000 it will be 30% of the tax. And there will also be such as, these are the slab rates, okay, for the cooperative society, but there will be what, there will be some surcharge rate as well. So the surcharge rate will be same as applicable for the domestic company. We are going to see the domestic company here, so we'll discuss the surcharge for the cooperative society and the cooperative society and the domestic company simultaneously. Okay, because both are the same. The surcharge for the cooperative society and the domestic company both are the same. So let me first cover the let me first cover the tax rates for the domestic companies. Okay, see, domestic companies, if your total income, so total turnover for the cooperative, so for your companies, there is no word for an income. The word is turnover. Okay, if you turnover, because it comes to the revenue, the sales or the gross receipts. In turnover, in case of, if in case you have a business, or gross receipts in case you have a professional company, so it will come to the gross receipts. Okay, if your total turnover or the gross receipts for previous year what, 22 23, of previous year 22-23 is up to 400 CR. If up to 400 CR, then your tax rate will be 25%. I hope it is clear. But if your total turnover or gross receipts of the previous year 22-23 is exceeding 400 crores, if the case is otherwise, then your tax rate will be 30%. So here as well the government gives you the relaxation, so that if your total turnover is less than 400 crore or up to 400 crore, then your tax rate will be only 25%. But in other cases your tax rate will be 30%. And for the foreign company, if you are a foreign company, you are not established in India, okay, you are not incorporated in India, so if you are a foreign company, then your tax rate is going to be 35%. This is the amendment for your attempt for the May 25 and the November 25 attempt, that the foreign company tax rate changed to what, 35% instead of 40%. Earlier this going to be 40%, now it is reduced to 35% only. I hope it is clear. So what you have to see, the turnover or the gross receipt for the, in the case of the companies for the previous year 20 to 23, if the turnover is up to 400 crore, then the tax rate will be 25%. If it is otherwise, then the tax rate will be 30%. And for the foreign company, the tax rate will be 35%. I hope it is clear. Now, surcharge in case of the companies or the cooperative society, because for the cooperative societies as well, the surcharge is same as a domestic company. Okay, for the domestic company, not the foreign company. Okay, for the domestic company. Now, if your income exceeds 1 crore but up to 10 cr, again what the word is, total income. The total income if exceeds 1 cr but up to 10 cr, then the domestic company will have to pay tax at the rate of 7%. But if it's earning, if the total income is greater than 10 cr, then the domestic company will have to pay the tax at the rate of 12%. I hope it is clear. If 1 crore greater than 1 crore up to 10 cr, the domestic company will have to pay the tax at the rate of 7%. Or if they are earning the 10%, then the domestic company will have to pay the surcharge at the rate of 12%. But the limits are same, but the tax rates and the surcharge rates are different for the foreign company. If the foreign company is earning greater than 1 cr but up to 10 cr, then the foreign company surcharge rate is 2%. And if they are earning greater than 10 cr, then it is coming to 5% only for the surcharge rate. And these domestic companies, these 7 or 12%, see, I have also written here the 7 or 12% rate will also be applicable for the domestic companies as a surcharge. I hope it is clear. Now coming on to the point, this is the most important thing, that the tax rate for the assessment year 25-26, special tax rate, what I have said is special tax rate. Special tax rate are what? See, these are given under chapter 12 of the act. What of the act? Because I have said the special tax rate. If these are the special tax rate, then this is to be given under the income tax act itself, not by the finance act. What you have studied till now are given under what? The finance act. But the special tax rate are to be given under the income tax act only. So that is why I have not said these tax rates are covered under which chapter, which section. The section is not written here, so we have not given the section number here. But now the special tax rate for whom? Special tax rate for individual HUF, AOP, BOI, AJP, not the companies covered here. Okay, individual HUF, AOP, BOI, AJP, there is the specific section written in the act. What is the section? Section number 115 BAC. As I have said, if there is to be any special tax rate to be given, that is to be given under the act. And if they are giving under the act, then there must be some section that governs that tax slab. So for the individual HUF, AOP, BOI, AJP, they have given, the government has given a tax rates. Okay, they have given the tax rates. Okay, so what is the tax rate? Up to 3 lakh rupees. If you are earning up to 3 lakh rupees, there will be zero tax rate. Now see the difference. Earlier, in the old regime that you have studied for the individual, and now what are the differences? Whether it says resident or non-resident, whether it says anything, no. So whether you are resident, you are non-resident, you are covered here itself. Okay, did they give any age? Like in the earlier, it is below 60 to 80 or 80 above. Any age is written here? No. So you are anyone, resident, non-resident, earning any income or of any age, you will cover 115 BAC itself. There is only one slab instead of those three slabs. Okay, to whom it will be applicable, we'll understand this one by one. For individual HUF, AOP, BOI, HAP, your up to, if you are earning up to 3 lakh rupees, your tax rate will be 0. 3 lakh to 7 lakh rupees, if you are an individual who have given the exams in the November 24, okay, November 24 or the May 24, these slabs are changed now. Okay, earlier it is going to be 3 lakh to 6 lakh, 6 lakh to 10, 9 lakh, 9 lakh to 12 lakh, but there is a slab rate change. Okay, 3 lakh to 7 lakh, the 5% rate is applicable. 7 lakh to 10 lakh, 10%, 10 lakh to 12 lakh, 15%, 12 lakh to 15 lakh, 20%, and greater than 15 lakh, 30%. Earlier, the greater than 10 lakh was also 30%, but here, after 15%, the tax rate will be 30%. I hope it is clear. Now, sir, that when there are two tax slabs, then can we opt anyone? Yes, you can opt anyone, but by default, when you go to the income tax portal and want to file your return of income, it will be default. By default, they will calculate by when you put all the details of your incomes, all the details of your deductions, each and everything, by default they will calculate the tax as per 105 BSE with this tax slabs only. By default they will calculate the tax at the rate of at these slabs only. But if you want that, no, I want to go in the old tax regime also, because there are certain conditions to come under 105 BSE. You have to left certain deductions as well. Not certain, you have to even left each and everything if you come in the 115 BSE. Okay, so the individual saying that no, I want to take the deductions. I have paid the LIC premium. I have paid this or that. I have taken the health insurance. I want to take benefit of those deductions. So if I want to take benefit of those deductions, then I have to opt for the old regime, okay, that we have studied above. So if so the individual wants that, I have to take what, the benefit of the old regime where all the deductions are applicable. You can take each and every deduction. Okay, so if the individual want to take the benefit of the old tax regime, that the regular tax regime or the general tax regime, so what he have to do, he have to file a form. You have to file a form directly. It is a matter of hardly of 1 or 2 minutes. You can easily file that form over the portal itself. Then you can opt out and take and give tax as per the general tax regime that you have studied above. Now your homework is you have to find that form number. What is the form number that you have to file if you want to opt out from the regime, that is the default regime 115 BAC. That is what we have written here as well, that Section 115 BAC is the default tax regime. Default. By default, by when you go to the income tax portal and start filing the return of income, then by default they will calculate tax at the rate at 115 BAC. Okay. Until it's specified that assessee is opted out from 115 BAC, you have to apply 115 BAC only. Now in the question, if they have said specifically, that the individual has opted out means he filed that form and switched to the old or the general tax regime. If the question said that if the assessee has opted out from the 115 BSc, that he does not want to apply 115 BSc but he opts out, he switched to the old tax regime of the or the general tax regime, sorry, then you'll calculate the tax at the old tax rates. But if the question does not specify anything, so you have to calculate tax at these rates only. These rates will only be applicable. In that case, you cannot apply the old tax regime. Okay, whether the question writes or not, you have to calculate this only. But if they said that the assessee has opted from 115 BSc, then you come here and calculate the tax as per this slabs rate. I hope it is clear. Okay, now coming to the point. Now again, AMT is not applicable. What it says, AMT is not applicable under 5105 BSc. No carry forward. We'll understand this when we are studying the MET and AMT chapter. After this, the PGBP, and with the PGBP continuation, there is a chapter called MET and AMT. Then we will understand that as well. Okay, this will cover there as well. So you can mark this. Okay. Under this section, maximum rate of surcharge is 25% only. So the maximum surcharge rate is only 25%. What you have studied, the surcharge rate. See, you have studied the surcharge rate here. These are the surcharge rate. But here what it says, from to above 2 crore, it says in the new tax regime, what it says, above 2 crore it is 25% only. The concept of 37% in the new tax regime in the 115 PSC is abolished. So if you are earning above 2 CR, your surcharge rate will only be 25%. The tax rate, the surcharge rate of 37% is abolished. I hope it is clear. Now, therefore, for income greater than 5 CR, the assessee shall have to pay the maximum surcharge at the rate of 25% only. The surcharge rate of 37% is not in this regime. I hope it is clear. For brought forward unabsorbed depreciation shall not be allowed in setup. We'll study this in the PGP part also. I have to write these all things because these are the tax slabs. I just want to cover each and every tax slab in the basics and the tax structure chapter only. But some things will be deferred to after the PGP chapter. Okay. Now, the concept of marginal relief. This is the most important thing that you have to write. Okay, the concept of marginal relief is available if the total income is 7 lakh or more, but does not exceed exceed in this is changed 720 to 220. In your notes that you are getting, it is already changed. Okay, tax on such income cannot exceed the amount by which the total income exceeds 7 lakh rupees. Now it is important, what it is important that we have studied the marginal relief concept in the earlier part of this lecture only. See, where the marginal relief was applicable, the marginal relief was applicable on the surcharge part itself, on the surcharge part. But you get relief part. See, in this chapter as well, there is a concept of rebate for 115 BSE, for 115 BSE right here, for 115 BSE. If you are opting for 115 BSE, the rebate will be applicable here, the rebate will also be applicable here as well. Okay, if you are opting out, then this rebate will be applicable to you up to 5 lakh rupees. Okay, up to 5 lakh rupees. But if you are opting for what, 115 PAC, then you have to come and find, if you then you have to come under this rebate. Okay, again the same condition, resident individual having total income up to 7 lakh rupees. Earlier it was what, it was 5 lakh rupees, but here it is 7 lakh rupees. Okay, so that 100% of the tax or 25,000, whichever is lower. Earlier it was 12,500, but here it is 25,000, because if you calculate tax on 7 lakh rupees by this slab, your tax will be what, 25,000 only. Because see, if I am earning 7 lakh rupees, okay, sorry, till 3 lakh, it is zero tax. Okay, for 3 lakh to 7 lakh, that is a 4 lakh rupees, 4 lakh multiplied by 5%, what will come? 4 lakh multiply by 5%, it will come to what, 20,000. Okay, it will come to 20,000, but it is here written as 25,000. Okay, so what is lower? 100% of the tax is 20,000 or 25%, whichever is lower is 20,000. So you'll get all the deduction of 20,000. Okay, and the other conditions remain same. What is the other condition? First, it is rebate will be given before the HECs. Okay, HEC, the health and education says you do not need to add before, you can give deduction before that of the rebate. And second is rebate is not applicable on the LTCG under section 112A. Both the conditions are same, but sir, there is a problem, there is a problem. Like in the rebate, earlier in the rebate we have seen that 100% of the tax or 100% of the tax or what, or 12,500, whichever is lower. And we have calculated that on the tax of 5 lakh rupees, there is only 12,005 rupees of 12,500 rupees of tax. Okay, and 100% of tax is also 12,500, so whichever is lower will definitely come to 12,500. There was no conflict. But here 100% of tax or 25,000, but here 100% of tax is 20k and this is 25k. Whether we do not have any problem, always the tax, lower tax, the tax will be lower. What, 100% of the tax, always the 100% of the tax, that is 20,000, will be lower. So why we write this 25,000, why it is not 20,000 as well? Because here as well both the figures are same. In the earlier, the general tax rates also for rebate, 100% of the tax is also 12,500, and they have given the limit of 12,500 is only. So whichever is lower is 12,500 only. Okay, but here there is a problem, there are two figures. 100% of the tax is 20,000 and the and other one is 25,000. Okay, so we have to calculate this whichever is lower, so it will come 100% of the tax at every point. But there is a problem, there is something that the government forgot to change. See, in the Finance Act 2023, these that I have already said that the slab rate was earlier different. That from 3 lakh, 3 lakh was same. From 3 lakh to 6 lakh, 6 to 9, 9 to 12, 12 to 15, and 15 above. This was the capital tax slab until the before the Finance Act 2024 came. Okay, this was the tax slab. Now, tax of 7 lakh by these slabs. Okay, these slabs you do not need to understand or you do not need to remember. Okay, just I am to explain something, I am showing this thing. From 3 lakh to 6 lakh, there is a tax of what, 5%. So 3%, 3 lakh multiplied by 5% is comes to what, 3 lakh multiplied by 5% comes to 15,000. Okay, then it is 7 lakh only, rebate is applicable up to 7 lakh only. So 6 lakh to 7 lakh, there is a 1 lakh rupees income, the tax slab is what, 10%. So 1 lakh multiplied by 10% comes to what, 10,000. So it will be 25,000. So the rebate portion comes to play when when there was a old provision 50, if by the finance act 2023, this was the tax, this was the rebate, and this was okay. 100% of the tax payable is also 25,000, and the maximum limit 25,000 is also the same like this only. So whichever is lower will only always become 25,000. But by the finance act 2024, the Nirmala Sitharaman ji came in the parliament and said that we propose to change the tax slab for the 115 BSE, and they changed the tax slab from 3 lakh to 7 lakh, 7 lakh to 10 lakh. But by changing the tax slab, did not change the rebate. They did not change the rebate, and as of now as well, this 25,000 is written. Usually it should be 20,000, but it does not make any difference for the calculation part, because whichever is lower will only always become 100%. This is just a drafting error that they should also consider this point, but if they did not consider, there is no problem at all, because 100% of the tax payable is going to be the lower point, all as always. Okay, this is the point. Now coming to the point of the marginal relief, the question point number 5. What is this point number 5 is? See, earlier the marginal relief concept was applicable for the surcharge only, that we have studied in the earlier part of this chapter only, of today's lecture only. Now, what under 115 BAC says? A 115 BAC is given with the option that marginal relief is also applicable on what? Rebate. Marginal relief is also applicable on what? Rebate. This is not applicable in the general tax regime that we have studied earlier. This is applicable for what? 115 PSC only. So see, marginal relief concept. Marginal relief. There are two types of marginal relief: surcharge and rebate. Okay, for surcharge, general tax or special tax, 115 BSE, both applicable. For rebate only, special tax rates are applicable. Okay, special tax 115 BAC is only applicable. For general tax rates, the marginal relief on rebate is not applicable. So, sir, what is the concept of this marginal relief on the rebate part? Same here, same thing. That your income, your same. What is the concept of marginal relief? That the if there is a increase in income that is lower than the increase in tax, due to what? Due to surcharge. Earlier that was it was surcharge, but for 115 BSc they have also given an option for the rebate. If your increase in total income, if your increase in total income is less than increase of your total tax, then under 115 BSc there is a concept of rebate. Let us understand this with an example as well. Section 115 PSC, marginal relief for rebate. Okay, this is the new concept which is not earlier in the general tax regime, but for the 115 BSc only. This is need to be importantly learned, that marginal relief for rebate is only applicable for the 115 BSc and not for the general tax regime. Okay, this is the one thing. Now solve a question. Example one. Example one is what? See, Mr. Suppose Weber earned earned the total income of rupees. Suppose suppose 7 lakh. Okay, of rupees 7 lakh. Mr. Weber earned the total income of rupees 7 lakh and opts for 115 BSc. Okay, opt for 115 BSc. I am going to take the 115 BSc only. Calculate the tax liability. Okay, now see, should I give him the age? Should I give the age of Mr. Weber? Does not matter, because under 115 PSC, the age does not matter. Okay, I'm earning 7 lakh rupees of income. Okay, now what will be the solution? I hope you are writing each and everything. I I'm not going to say each and every time, but you have to write each and every time. Okay, now see, particulars, and rupees. Tax on 3 lakh rupees, because it is now there is a slab of 115 BSE, not the general tax slabs. Okay, so tax on rupees 3 lakh rupees, there will be nil tax. Okay, because the basic exemption limit under 115 BSE is 3 lakh. Now 3 lakh. Now the slab is what? 3 lakh to 7 lakh. Okay. Now the slab is what? 3 lakh to 7 lakh at the rate of what? 5%. So 4 lakh multiplied by 5%, which comes to what? 20,000. Okay. So my tax will be 20,000. But less rebate under section 87A. What is the rebate under section 87? It says 100% of the tax, 100% of the tax, okay, or 100% of the tax, or rupees 25,000, whichever is lower. So 100% of tax is what? 20,000. 100% of the tax is what? 20,000, and it is saying that 25,000, whichever is lower is 20,000. So 20,000 is lower. I said 20,000 is lower. My tax liability comes to what? My tax liability comes to what? Zero. I do not need to pay anything. This is what the concept of rebate is. Okay. Tax liability is zero, and this is what the concept of rebate is, that we do not want to take tax from those who are earning 7 lakh rupees. This is the point. Okay. Now, changing the question. Changing the question. Again, I'm you have to write this question again. Okay. Example number 2. Let's do my income 7 lakh 20,000. Not more than this. 7 lakh 20,000. My income is 7 lakh 20,000. And please assume that Mr. Weber is a resident. Okay, na? Above as well, it is also resident. Mr. Weber, resident. Because then only the concept of what? Rebate is applicable. Okay, he's a resident. Okay, now you have to calculate again. Solution. So like, just let me take this. You have to write, because it is your exams, not mine. Okay, so you have to write each and every point again. Okay, now see, I am earning what? 7 lakh 20,000. 7 lakh 20,000. So the 7 lakh 4 lakh 20,000 multiplied by 5%, it will come to 21,000 of the tax. Okay, 3 lakh to 720, 4 lakh 20,000 multiplied by 5% comes to what? 21%. It is wrong. It is wrong. Because see, 7 lakh, up 7 lakh, there is a slab of 5%. So it will come to 20,000 only. But if you're earning more than 7 lakh rupees, so come here, 7 lakh to 10 lakh. There is a slab change. Okay. Do not forget this. At the rate of 10%. So we are earning maximum what? 20,000. 7 lakh to 720. So there is a excess of 20,000. 20,000 multiplied by 10% comes to what? 2,000. Okay, so I am giving tax at the rate of 22,000 rupees. Okay, now if I am giving the tax, I am earning 720,000. Whether the rebate is applicable? No. Rebate is applicable only when the total income is up to 7 lakh. But here the total income is 720. So the rebate is applicable? No. The rebate is not applicable. So my tax comes to what? 22,000. But here as well, there is a twist. How can I forget you? I can never forget you. What? This is the health and education cess. 4% of 22,000. 22,000 multiplied by 4%, it comes to 880. So the tax liability comes to what? Let me change this. Tax liability comes to what? 22,880. Okay. Now my tax liability is 22,880. This is the, again there is a problem. Again there is a problem. There, what is the problem? See, I am earning 7 lakh rupees, giving tax 0. I am earning 720, but increase of only 20,000 of my total income, my tax increases to 22,880. This is the real problem. Again, the same thing of marginal relief comes here, because the increase in income is what? 20,000. But what is the increase in the tax? The tax increases to 22,880, because earlier we were giving 0, now we are giving what? 22,880. So my increase in income is only 20,000, but my increase in tax comes to 22,880. This is the real hardship. Now, the government came for the 115 BAC only. Okay, for the 115 BAC only, government is saying that, see, we are not giving the same formula of the margin relief. You calculate that for the surcharge only. But for this section 115 BAC, we are saying that government, okay, Nirmala Sitaraman ji, she said, okay, we understand your problem. We are saying that we will not take tax greater than your income if it is a greater than your excess income, if it is a case of marginal relief. See, it is a case of marginal relief that I am earning 20,000 extra, but I am giving the tax at the tax 22,880 extra. This is my problem. So the Nirmala Sitharamanji said, okay, we will not take tax excess your income. So what is my excess income? Excess income was only 720 minus 7 lakh. My excess income is rupees 20,000 only. So the tax will only be 20,000. Therefore, so the tax liability will only be rupees 20,000. So what is the, therefore, the marginal relief will be what? You were paying actually tax of 22,880, but the government is taking only 20,000 from you. So the concept of marginal relief comes here. 288 is the marginal relief amount. I hope it is very much clear. So the government is saying under 115 BSE, the tax lab, the government is saying what? That we will not charge you extra than your extra income. You are earning increase in extra income of rupees 20,000. You are earning extra 20,000 only. So your tax liability will only be 20,000 only. We will not tax you 22,880. This is same like in the marginal relief as well. You were taking what? You were taking the extra 1 lakh rupees that you have earned, the extra 1 lakh rupees. But here you same as well. You are taking the extra increase in income. In the above as well, in the surcharge, you were taking the extra income. You were taking the extra income of the surcharge. Now here as well, you are taking the extra income of 20,000. I hope it is clear. This is clear. The same thing applies here. Okay, the same thing applies here. So my marginal relief comes to what? 20,000. So 2,880. This will be my marginal relief. But there is a problem. What amount this concept is applicable? So what amount this concept is applicable? So the amount is, we have calculated this amount is 722 220. Above 722 to 230, suppose it is amount 722 230, the increase in income is greater than the increase in tax. But up to 722 to 220, the increase in income is less than increase in tax. That is why the marginal relief will only for the rebate part is only applicable to 720 to 220. So if the question says that your total income is coming to 720 to 220, so it will come to the marginal relief, and the amount, what is the maximum amount that he can give the tax? The maximum amount he can give the tax is 22 to 20 plus HEC plus health and education cess. I hope it is clear. I hope it is clear. Great. Okay. This is what it is written here. See, this is what it is written here. Concept of marginal relief is available if total income more than 7 lakh but does not exceed 722 to 220. Okay. Tax on such income cannot exceed the amount by which the total income exceeds 7 lakh. The tax on such income means the 7 lakh 20,000 cannot exceed by which total income exceeds 7 lakh. So my total income exceeding 20,000 only. So my tax cannot exceed from 20,000. That is why the concept of marginal relief is here. Now I have also clarified that, however, marginal relief is not available in the case of regular tax regime that we have learned in the previous lecture and the later in the previous part of this chapter lecture as well. There marginal relief available because of surcharge but not because of rebate. There was marginal relief concept, but because of the surcharge. Here as well, for the surcharge, the marginal relief is applicable, but not for the case of rebate. Okay. Now, there are certain opt-out conditions. There are certain opt-out conditions that, see, as I have said you, that if an individual want to opt out from 115 BSc, if an individual wants to opt out from 115 BSc, then he have to file a form. Suppose an individual have filed the form. An individual have filed a form. Can he again come to 115 BSc? Can he again come to 115 BSc? Then the government is saying that if you do not, if an individual, if an assessee, if a person does not have the PGBP income, if he does not have a PGP income, PGP income is from the income from your business or profession. Okay, if you do not have a PGP income, then you can switch every year. You can switch every year. This year comes to 115 BSc, next year opt out. Again come to 115 BSc, again opt out. There is no limit on you. There is no limit on you. This is the opt out condition for the assessees who does not have PGBP income. See, if the assessee does not have PGBP income, then what it says, option of regular tax regime must be exercised along with the return under section 139A for every previous year. For every previous year, when you are going to file the return of income under section 139(1), then you can opt this option every year. Every year you can switch out, so you can opt out, or every year you can opt in of 115 BSc. But there is a problem for the assessees who are having PGP income. The assessees who have PGP income, there is a problem. The government has given the one time opportunity only. Come, go, come, नहीं now you cannot go. What it says, option of regular tax regime must be exercised along with the 139(1). This is also okay. The same is above, the same is in there. The assessee does not have a PGP income. What it says, you can opt this option along with when you are going to file your return, but such option once exercised shall apply for the subsequent AY also. If you have opted out from 115 BSc, then you always be opted out for 115 BSc, then you cannot come. But there was a condition. However means they are giving some relaxation. However, the option once exercised for regular tax regime can be withdrawn only once for a previous year. Thereafter, the person shall never be eligible for the benefit of regular tax regime till the time having any income under PGP. What it says, we are giving the one-time opportunity. If you have opted out, if you opted out, then you will be opted out for every subsequent year. Okay, but there is a one option. However, one time we can let you come again in 115 BSc, but this time if you come under 115 BSc, we will not let you go anywhere. Now you have to opt only for 115 BSc until you have the income from PGP. Serious to have income from PGP. Now, see, till the next year, you are having the PGP income. You cannot go anywhere. But suppose in the years 27, 28, you do not have what? You do not have the PGP income. If you do not have the PGP income, now you come here. Assessee does not have PGBP income. If the assessee does not have PGBP income, then he can switch every year. He can opt for the option of that switching every year in the tax return itself. Okay, now what are the benefits? You have seen the benefits of 115 BSc, that there is a higher tax level, there is a lower tax rates as well. There is a good options, but to opt for this, to opt for lower tax rates, to lower tax slabs, there are certain deductions that are not allowed to you. You cannot avail any of the deductions that are quoted here. You cannot avail any deduction. Section 10 AA SEZ you cannot claim. What is this? We will study in the PGP chapter. Salary allowance exemption. You have studied in the intermediate the salary allowance exemption, like traveling daily or conveyance allowance. You can there are various type of allowances that is available to you, but only traveling daily and conveyance allowance, only these three allowance will be applicable to you. You can take that, otherwise no other allowance is applicable to you. You have to forego those allowances. Okay, now leave travel concession, HRA, they will not be applicable to you. You have to forego those. Allowances for member of minorship. Now see, under section 1032, what it says? It says that if you are clubbing the income of if you are clubbing the income of minor, then you will get a certain deductions. Okay, the 1500 rupees deduction, they have said that. Okay, so those allowances will also not be applicable to you. Allowances to MP MLA not be given in under this under this scheme. Okay, salary deduction under section 16, salary deduction under 16 of the professional tax and the entertainment tax. Professional tax or the entertainment tax was also in the salary, but if you are opting for 115 BSc, they will not be allowed. However, whether the standard deduction of 50,000 is allowed, yes, the standard deduction of 50,000 is allowed, but there is also a change by the Finance Act 2024. What it says the standard deduction is allowed for, but for 115 BSc, the amount of 50,000 is changed to 75,000. If you are opting for 115 BSc, then your standard deduction will be 75,000, not the 50,000. But if you are till the previous year 23 24, if for standard deduction previous year 23 24, it will be 50,000. After that, it will be 75,000 for the 115 BSc only. For 115 BSc only, and not the earlier parts. Okay, up 30 23 24, it is 50,000, but for previous year 24 25, it will be 75,000. For your attempt, it is 75,000 only. For your attempt, you have to learn what 75,000 only. Now where you have studied the income from house property, so interest deduction on self occupied house property, so it will not be applicable. For the self occupied house property, there was a deduction now, like 30,000 or 2 lakh rupees based on certain conditions. Okay, there were four conditions. If you fulfill those conditions, you can opt for the 2 lakh rupees of the interest deductions. But for the LOP, let out property, there was no such limit on the interest deduction. You can claim any amount of the deduction. So interest deduction on the LOP was allowed, and here as well the interest deduction for LOP allowed, but for self-occupied property they disallowed. Set off against any other head is not allowed. You cannot allow any other head set off. So set off is also not allowed here. Additional depreciation we will study in PGP. These all section we will study in the PGP. These are also not allowed. Okay, then the deduction under section 6A, like your LIC premium, your health insurance, your education loan, this, that, every kind of deduction they have not given to you, except there are two or three deductions they have keep for you. Except section, like any deduction which are written in under section 6A, in under chapter 6A, you will not get. But there will be certain three kind of deductions that you can get. What are those three deductions? It says 80 CCD2, employer contribution to the new pension scheme. If your employer contributing, the employer part that is contributing to the new pension fund, you can take deduction of that. Okay, then 80 CCH2, that is a new scheme that came in the Finance Act 2023. What it says, the central government contribution to the Agnipath scheme. There is a defense scheme, Agnipath scheme. So if the central government is contributing to the Agnipath scheme in name of that person, in name of that defense personnel, for that also that defense personnel can take deduction. Okay, and the 80 JJ, this is also the part of what PGBP type. So 80 JJ what? Employment of a new employees. If you are given the new, employment of the new employees, then 80 JJ is also applicable. So for 80 CCT2, You are not going to get, you are going to get deduction for 80cc H2. You'll going to get deduction for the Agnipath 80 JJAA employment for new employees. But apart from these three deductions, you are not going to get any of the deduction if you are opting for 115 BAC. I hope it is clear. Okay. Now, see, we have left with the two pages of this first chapter, and these two pages write down to be done after PGBP, because these are related to the domestic companies and as well. So we have to study them after the PGBP or along with the PGBP, both the things. Okay, to be done after PGBP. Okay, so these are the two pages that will done after the PGBP. So first chapter till what we have studied is completed. What we can study till now, we have completed few things. These are the four sections that we need to study, but we can only study after the PGBP. Okay, all tax labs are compiled here in the first chapter, but some things we need to study in the later part of the of our exemption series. So till then, this is our second A lecture. We'll meet in the second B lecture. You can revise this before moving ahead. We'll move ahead with the PGBP lecture in the second part of this video. Okay, till then, study what we have learned till now, the basic concept and the text structure. Till now we have completed. There are only four sections are left for the company's part. Okay, till now you revise each and everything. If you have doubt, you can ping me the doubt as well in the Telegram channel. Till then, revise it as well. We'll meet in the another video. In the next video, next part of this lecture, we will start with the PGP. Okay.